I think we can start with what's your expectation for tapering? Just do you expect any scenario like 2013?
My honest answer is it's hard to know, but I think it's a risk that is possibly increasing. We're chatting on June the 1st, when a very important day for all sorts of crucial high-frequency data. And this morning, South Korea reported its best export performance since 1988, an incredible 45% year-on-year gain. South Korea's fastest country to report world trade. And so that's a sign of just how remarkable the recovery in global trade is. Since then, we've had the final purchasing managers indicators for many parts of Asia and Europe. Italy and Spain, two of the typical laggards, have seen the strongest PMIs in over 20 years. And so it just adds to the evidence I'd seen already from the previous month. We are getting a very strong global cyclical recovery. And at some point, it's going to make central banks nervous.
So what kind of impact will tapering have on emerging markets and Turkey especially?
Well, as always, when the Federal Reserve Board starts to shift from one direction to another, amazingly, really, given how well history has of understanding these things, it seems to have an impact. And at some point, if the markets start to see the sign of a different tone from Federal Reserve Board officials, we will probably see a further rise a fresh rise in US bond yields. And it will mean, unfortunately, a negative move probably for many emerging markets, and certainly given Turkey's own challenges, Turkey included.
Okay, and the tapering won't be the only problem for the emerging markets. What kind of challenges they may face after the pandemic?
Well, I mean, just two parts of that, really. We live in this global monetary system that remains remarkably driven by the role of the dollar in US financial markets. And in many ways, it's a shame, because the US economy doesn't justify the scale of the importance of US financial markets. The US is 25% of global GDP, and yet the dollar's anywhere to 70% of global finance. And so it's pretty hard for anyone to escape the consequences of a shift in the Fed. Coming to the second part, what typically happens in those circumstances is those countries that have got the biggest dependency on global savings, because they don't save so much themselves, and Turkey sadly is in this category, are usually amongst those that are the most vulnerable when the Fed starts to shift. And so it's very important that Turkish policymakers think carefully about this from a strategic perspective as well as from a short-term perspective.
Markets to invest.
So this comes to the sort of $1 trillion question, really. There's, as always, there's an enormous difference between the economic cycle and the structural future. And I would say there are at least two, maybe three really basic but important points. First of which, we're coming off the back of what's been, I think, the best decade ever for US financial markets, both bonds and equities. So on a valuation basis, many other assets, particularly emerging market assets, look relatively attractive. And that includes Turkey, because it's not done that well. Secondly, when one thinks about the long term and investing, you can't ignore value. And if you want to invest for the rest of this decade, looking at places where the greatest attraction in terms of return and valuation makes sense to me. And Turkey stands out as having some attraction in that context. But it brings me to the third point, is that as important as valuation is, and always is, those valuations can also change if the domestic fundamentals get worse. So it would be nice to think that Turkey's undertaking policy changes that make its valuation lasting, and it won't just be eroded either by inflation or a decline in the value of the Turkish lira.
What kind of risks and opportunities can Turkey face in the near term, according to you? You see value in Turkey, but of course you see the risks also in the near term and the long term.
So, because of the unfortunate interaction between how Turkey's political leadership has behaved, particularly with both the perceptions and the actual independence of the central bank, it means in the near term there's an additional risk premium to Turkey, because you never know when some unexpected adverse development is going to happen. And you would think that by now the Turkish leadership would have realized you just don't play around with these things unless you've got stronger, persistent fundamentals. And so if we go into tapering, given Turkey's need for foreign capital, there's a strong chance that Turkey will be one of the countries that immediately suffers worse from those cyclical changes relative to elsewhere.
Also, I would like to talk about the green transition a little bit. Can emerging markets do that green transition after the post-pandemic era?
I said a minute ago, you asked me $1 trillion question. This is perhaps becoming the $2 trillion question. We do in many Western countries have almost a love affair going on with the green recovery. And I think as the year progresses, we're going to see more and more signs of that, particularly with the UK hosting so-called COP26. We'll probably see more and more announcement of initiatives about reducing the use of old-fashioned carbon-using energies and an increasing shift away from carbon-using forms of transport. And obviously, it's easier for the more advanced economies to do that sort of thing, but by definition, it's trickier for emerging economies that are still more focused on their citizens trying to escape the middle-income poverty trap. And so until we can get the price of these new energies down dramatically and persistently, including, for example, buying energy efficient and green-friendly automobiles, it's going to be a lot harder by definition for so-called emerging economies. But flip side of that, those that are bold enough to try and take the initiative and move as quick as they can, I think they will get some kind of reward, because one of the fascinating things that's been going on in financial markets is that the markets are now starting to reward companies and places that are adapting to the green future better than others.